Okay, hello and good morning, everyone. Welcome to Easy Markets Daily Pitch International with me, Darius Anucauskas. Today's the 30th, if I'm not mistaken. Yes, 30th of November, 2023. So, yeah, welcome, everyone. Welcome to this Thursday's morning session and the last trading session of autumn of this year. So the last trading session of November. So yes, tomorrow we are stepping into December. So yep, guys. As you can see here today, I am without my glasses. So I'm trying to see how that will work. A little bit of an experiment, but hey, look, life is all about experiments. But look, before we go further, as always, we need to have a quick read through our risk disclaimers. So yep, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest. I'll disappear from that little left corner and I'll be back in a bit. Okay, so now then, also just before we go further, as always, just a quick mentioning of our Easy Markets website, which you can always check out for more information about us. If you have any questions, yes, you can always reach out to us and we'll be happy to answer those. You can reach out to me as well. I mean, if I don't know the answer, I'll try to find one. So, but look, guys, like I said, check us out here. Believe you can find something useful. Now, with that, let's jump into the charts. Let's see what's happening here, basically. Let me just double check something very quickly. Okay. Yeah, okay. That's all fine. So let's have a look at Nikkei 225. So look, yesterday I've mentioned this one very quickly. I will mention it again because what I said yesterday was that, look, we could see a drift lower. We could see a move towards that 38.2% retracement on the Fibonacci, which so far is doing a good job and providing good support. And then I said that, hey, maybe we'll get a nice little rebound. This is what we're getting right now. And then I said that, look, maybe this is going to end up being something of a head and shoulders pattern, a little head and shoulders. But again, that's way too early to confirm that, because basically we are currently, if this is a head and shoulders pattern, then we are currently forming that head and shoulders, this right shoulder right here. So that's why a little bit, let's be a little bit more careful. For now, let's wait and see. I mean, if we do see, like I say, like a hold up somewhere, maybe around here, somewhere below that 33,500 zone, something like that, then yes, maybe a drift back down here could be possible. So basically something like this could be possible. And then we will keep an eye on the so-called neckline, which is on my chart here around the 38.2% retracement. And then we'll go from there. If it gets clear, then yes, I'll go lower. Maybe I will ignore this upper side of the rising channel. I mean, at the moment, yeah, it's just here. I just want to see if this is going to carry any significance or not. But look, it seems to be quite all logical, because again, we are kind of maybe due for a bit of a correction. We had a good month of November. I mean, November was just, wow, spectacular. Look at this. I mean, look at this. We wiped out all the losses made in the past 3 months. And yes, I mean, we almost came close to that all-time high near the, sorry, that's not the all-time high, apologies. That's the highest point of 2023, because the all-time high is something else. I mean, I think I need to jump into one of those charts. Yeah. So let's put it this way here. Nope, that's not this one. Nikkei. No, it's not TVC. There we go. That's the one that I'm looking at. So this is a little bit more. Yeah. So there we go. That's the all-time high. I mean, of Nikkei 225, 38,957. That was reached back in 1990. Yes, it seems like we're on the right track. I mean, looking at this picture, it seems like we are on the right track. So let's see if we can clear this territory, clear the highest point of 2023 and move further north. Well, at the moment, let me just put this on the chart here. Yes, my colleague doesn't like my style, so okay, that's fine. Everybody has their own style. So yes, I mean the highest point is here. I think so. No. I mean, okay. On this chart, it seems like we've crossed this, but look, I think I would need to see a nice good push above that barrier. Let me actually go back to my chart. So yes, there we go. I would need to see a push above the 34,000. So the highest point, the current highest point of this year. And if we do get that, great, more buyers here could join in. So long story short, I need to see a push above, at least first, above the current highest point of November, and then go for that current highest point of 2023. China 50, guys. So we're seeing a bit of a retracement back up, and I think that what I need to do here is I need to redraw everything, and especially my levels, because this level here is no longer valid because it stopped working. So I think that maybe it's time to get rid of it and do something else here. So my upside scenario is still the same. It's still valid, and I'm still kind of keeping an eye on this downside line. If we can get that break, then yes, great. I'll go for some higher levels. For the downside, in general, we should still stick to the downside scenario because we remain below this downside line. And yes, if we continue to trade lower, we continue to trade below this downside line, then yes, we'll continue aiming for that 11,557 territory somewhere around here, which is the current, shouldn't say current, but it's the lowest point of October, and then we'll go from there. If it gets cleared, wonderful, a forthcoming lower low will be confirmed. So, by the way, in terms of Chinese data, we got the China composite, China manufacturing and non-manufacturing PMIs. So all numbers came out lower. Honestly, lower than the previous, and not to mention the forecasts already. Yes, so the manufacturing and non-manufacturing PMIs came out much lower, yes, they came out worse than the previous figures. So yes, that's in a way not very good. But look, China 50, I think that it's currently kind of remains vulnerable to what's happening in the global market. I mean, yesterday we saw some data from the US, preliminary GDP figures, which came out better than the forecast. So yes, I mean, at the moment it seems like the whole Christmas rally is Santa Claus rally, or whatever you want to call it, is running nicely. Let's see if it's going to extend itself into December. But after seeing such a November, I mean, maybe a bit of a retracement could be possible at some point. But okay, look, I mean, I'm not saying that this will happen for now. I just have to stick to what I see on the chart. And at the moment, I mean, judging from other indices, there's like only upside. However, I'll get to the point where I'll jump into the US indices and the European ones. But coming back to the China 50 index, yes, I mean, this one is a tricky one for me for now, because we are still below the downside line. It's trying to climb back up, but it's struggling. It is struggling, and yes, so that's why we have to kind of be a little bit more bearish on the China 50 index, unlike with the other indices. ASX 200. So let's have a look. It's a beautiful break of this downside line. This is what I talked about yesterday. If you remember, I said that I need to see, after a beautiful reversal back up, my downside scenario was from this 7,000 mark, psychological 7,000 mark. My upside scenario was from this 7,064 territory. So basically, if we get a nice pop above that downside line, then yes, great. More buyers here could join in. We could aim for that 200-day EMA or this downside line. and then we will go from there. So for now, I would say this way, that everything's working according to the plan, and yes, I am targeting the upside, but only up until this downside line drawn from the high of the 27th of July. This is going to be my next target, and yes, and then we'll kind of go from there. So yes, if we do clear this downside line, great, I'll go for further higher levels. But yes, if we stay below this downside line, then there's another chance for another decline. But again, I'll examine that at a later stage. So yeah, that's my game plan on ASX 200. Let's have a look at the Dow. Just a quick good morning, everyone in the chat room. Yes, there we go. So I hope everybody's having a wonderful start of Thursday. I mean, if you've been selling or shorting this index this month, I mean, okay, you're one of me who was did not really believe that something like this could happen. And look at this. I mean, this is just spectacular. Let's have a look at I'm not talking about this. This is just still October. November starts here. And on the Dow, 8%. There we go. We've managed to reach 8% roughly. In 1 month. I mean, again, looking at the monthly chart, you can see exactly. So basically, this is this formation here. I mean, yeah, this was like the bearish, the bullish 3. I think. Just a sec. Let me just Google quickly the bearish 3 method. So yes, it was kind of the bullish 3. However, it's not exactly because we didn't have like a decent one candle here, because we had like this one candle, which theoretically should have been a one candle, ended up being like 2 candles, and then we kind of retraced in a beautiful form here. And then we popped higher. So basically, this kind of was that signal that, that something like this could be possible. So, because look, in general, we normally should have something a little bit more ideal like that. So, yes, or maybe it's also the falling 3 method. Also, this could be, it's kind of the same thing, to be honest. I mean, it's almost the same thing, but in general, you need to have something like this, like a structure. So in a way, this, I would say, kind of worked like that, but not really. So that's why maybe it was confusing for some. Maybe not everybody saw this coming. I mean, I didn't really think that that could happen. However, there were some indications, because we didn't fall below this little hurdle here, the 32,862. So we found good support. That's why this idea here, I mean, should have been foreseen. I mean, should have been seen. Now the question is, can we go higher? Because in general, the all-time high here so far is the 36,832, which was reached last year in January. So jumping back into the daily chart. So yes, at the moment, I am being very careful, very cautious. In general, I am still leaning towards the upside, because look, I mean, the current highest point of this year is near the 35,850 zone, approximately around there. And it's a very, very nice target. My only question is, can we reach that today? Somehow I doubt this, unless we do have some crazy shifts, because in general, today's date, I would say, be careful, because there is still a possibility that we could see this one rallying further north, because today we do have the Fed's beloved PCE inflation metrics. So yes, that's coming out. That's expected to decline. The core month-on-month and year-on-year PCE index is expected to decline a little bit. The headline is also expected to decline. So all of them. So basically, if those come out even lower than the forecast, guys, I mean, this could play out positively for for the Dow here, and we could see a further rally. I mean, look, how much are we missing from here to this highest point, the current highest point of this year? We're missing about 800. Yeah, no, sorry, not about 800. No, what am I talking about? 200 points. 200 points for Dow to do is, come on, it's like a piece of cake. So 200 points we're missing in order to kind of reach, roughly, I would say, to reach the current all-time high. Let's see. Let's see if we can get that. Let's see if we can touch that. I mean, that would be spectacular. I would say, in my opinion, I mean, that would be just amazing to see such a pop. And to be honest, given that this month was such a crazy month, I'm not excluding anything. S&P 500. So this one is, okay, a little bit on the modest side. Yesterday it tried to pop higher, and it did. It did move above my 4,580 zone, but it failed to stay above it. So that means that for me, it's still a bit of a waiting moment, because although Dow is showing very strong activity, S&P is a little bit lagging, and that's why I need to see that pop. I need to see that move above the 4,580 zone, and then yes, we could go from there. In terms of the downside, I'll stick to the same game plan. 4,540 is required for me. A break of it is required in order to go lower. NASDAQ. So yesterday also beautiful move here on NASDAQ, and we did pop above the 16,000, this level right here, the 16,173 territory, let's put it this way, but we failed to stay above it, so we drifted back down. So this, of course, it kind of gives that little bit of a worry signal. However, don't get me wrong. I mean, we still have a fantastic day today. We do have some data coming out, so keep your eyes on that. And in general, yes, NASDAQ is the biggest gainer percentage-wise this month. So far, it's kind of done around 11%. Yesterday, it managed to do 12%, 12 almost, and 12.5, and then drift back down. So that's okay. That's fine. So we're now kind of balancing around the 11% gain for the month. I mean, honestly, this is just like, wow. This is just spectacular. Looking at this candle here, I mean, yes. Look, don't get me wrong. It's not the first time it's doing something like that, but it's just that normally we see sell-offs like that. Like, for example, we saw here in April in 2022. Back here in this year, I mean, we didn't see anything like that, like this. So, yeah, I mean, now my question is, can we clear this barrier, and can we remain above the, this is the one, this is the highlighted one that I'm looking at. So let me just get rid of this Fibonacci. I think no longer needed. I think that's, yeah, it needs to go. What did I remove? I removed the line. Just a sec. Just there we go. So yeah, I mean, of course, the main focus right now is on this, on the previous highest point of this year, near the 16,062 territory right here. So at the moment we're just kind of bouncing around it. That's not really helpful, I would say, but hey, it is how it is. I mean, don't be surprised if we end the month here somewhere. But to be honest, we have PCE. I'm really hoping to see something, some sort of big action. But at the same time, I mean, the big action already happened. And maybe the market is just going to be like, or meh, you know. So, okay, look. Oh, Daredevil Dave, good morning. I can see you there in the chat room. I can see you there in the chat room. So welcome everybody else who's tuning in right now. So hope you're having a wonderful start of Thursday, the last day of October. I'm trying to make it sound as spooky as possible. The last day of November. I'm stuck in the past. Anyway, so coming back to this, right, with the NASDAQ, look, the problem, like I said, is the fact that it's struggling to move away from the previous highest point of this year. I have my levels here. I have my breakout levels. We did yesterday test the upper side of it, but we failed to stay above it, so no good. I'm still keeping an eye on it. I still need to see a push above it in order to go higher. So yes, once I get that, great. If I get that, great, more buyers could join in. Now, the German index, DAX, and yes, the German index here is looking quite positive. I mean, that one yesterday, since when it just opened, it just shot up, you know, straight to the upside. So I mean, at the moment, look, everything's in line with the idea. Yesterday, if you remember, during my morning video, I said that if we do pop above the 16,070 territory, I will go higher. My next target will be the 16,152, and then I'll aim for that 16,305, which is a beautiful area of support and resistance at the same time here. So at this point, it would play as a resistance. So that's my next target. I'm still aiming for that one. It's not far for this one to go. I mean, to do only 100 points, that's nothing for DAX. And let's have a look at how much has DAX done this month. And yep, around 9.5 or 9.2%, something like that. So yeah, good result. Again, very good result. So let's see if we can go a little bit more. By the way, how much would that be if we could reach this area, this level right here, this around 9.7? Okay, good. Also decent result. I mean, maybe we could hit that 10% target as well, but I don't want to rush into things, guys. I mean, I just want to go for my 16,300 level, and then I'll be very, very happy if we can reach that, for example, today. Now, in terms of the downside, I'm sticking to the same game plan, and I'm waiting for that breakout below this upside line, and then I'll go from there. In terms of economic data from the European Union, okay, look, we do have some preliminary CPI figures coming out, so yes, that's going to be interesting. We have some French data, Austrian data, German unemployment numbers. There we go. This is something that could be moving. So yes, we have we have the preliminary CPIs from the Eurozone, and basically, okay, President Lagarde, yes, ECB President, she's delivering a speech, so keep your eyes on that one. Look, everybody's, of course, trying to listen into these speeches and try to understand if they're planning to go for any cuts, or are they planning to go for more rate hikes. So I don't know, like, I think that they will remain vague as possible. I mean, they will keep the most tasty bits for the ECB interest rate decision and the press conference. So that's why at the moment I'm kind of just like, okay, look, they might. I will see. I want to see how the market reacts to anything what she says, because if she says something, if President Lagarde says something like, I don't know, like whatever. I mean, I don't want to listen into the words. I want to see the market reaction, because then I will gauge myself. So basically, I'm trying not to foresee the future before she starts speaking and then like take the correct position or something. No, I'm trying to kind of see what happens. I mean, I want to manage my risk accordingly. I want to see if there are any like explosions or sell-offs or something like that. So that's why I'm not rushing into things. That's why I like to kind of wait until that happens, and then honestly, if you think that you're going to be missing out on an opportunity, you won't, because you will be actually evaluating logically what's happening, and not basically trying to gamble your way in, just trying to guess which direction it could explode to. So the FTSE 100. So looking at the picture here, yes, we drifted lower. We came very close to the lower side of this rising channel pattern. So far, so good. I'll stick to my game plan actually for the upside. The 7,535 territory is something that I'm keeping a close eye on. For the downside, I need to see a break of this upside line, or the lower side of the rising channel, and then yes, if I can get that, great. More sellers here could join in. I think that I like this level here, the 7,419. If I can get that drop below that, yes, wonderful. I will consider some lower levels. US dollar. So there we go. So far so good. I mean, we did recover somewhat, so that's great within the falling channel. I have to point that out. But look, as I said to you before, this is just my personal observation. Not that it's like a theory or it is a theory, but it's not that rule. It's not a rule. But basically, whenever we have a strong decline like that, and then it's followed by a gradual decline, then we have a pop higher at some point. But maybe it might not be the most strongest one. No, it could just be somewhere a little bit higher here, maybe even towards my EMAs here, or maybe it could be towards this downside line. So long story short, basically, if you're looking for some higher levels, first of all, wait for a break of the upper side of this falling channel, and then you could aim for this downside line drawn from the high of the 1st of November. For the downside, I think that the better option here is to wait for a drop below the current lowest point of November near the 102.38, and then we'll go from there. Gold. So gold. Beautiful gold here, and I would say, look, yesterday, I mean, that was like a bit of a pause or something like that. So maybe today we could see some more action in gold. Now, ideally, I would like this one to go a little bit to the downside, a little bit, a correction back down, maybe towards this 23.6, and then maybe like it could find support somewhere near this upside line and then rebound and push higher. So look, in general, what I want to show you is a monthly chart, because we are approaching this key area of resistance, right? I mean, the all-time highs here near the 2081 zone, and so we're approaching this territory, and it's very, very important because a while ago, I mean, one of my analysis, I said that I'm targeting gold maybe for like 2,100, 2,000, and more actually 2,200 later on, because it would be like the new step into new dimension or new world, where gold will be kind of, will be around the 2000 mark, so because look, we got used to the fact previously when it was, let's say, back here in the day in 2019, it was like around 1,500, and everybody was like, whoa, that's a lot. And then somebody was thinking like, what, 2,000? I mean, okay, yeah, eventually, but I don't know, maybe not like, too soon. But then, yes, next year, boom, there we go. We shot up and we reached that 2,000 mark very, very quickly, and that was just amazing. Let me just have a look at gold TVC. There we go. So basically, I mean, look at this. There's more history here. So last time we were at like high levels were back in 2011. I mean, now we are, like I said, the way it's shaped up, it's that kind of weird. I think it gave it some time, like a couple of years, for the market to understand, look, 2000 is kind of the new norm, or let's say area near like 1,800, 2,000. That's like the new norm for gold, and everybody got used to that, adjusted. So I think that now we could be on our way to kind of establishing new highs, new higher levels. And like I said, for me, what I'm looking at is 2,200, and then yes, we'll go from there. Some of you might like to draw a Fibonacci extension, for example, and see where we could go further. So for example, to take this one and grab that. So you can see that these levels here are, let's say the 61 is 61.8 here. Well, let's start off with the 52. The 50 is around the 2,130 zone, and the 61.8 is around the 2,250 territory. Now, is this the correct way to draw the Fibonacci here? Well, in yes and no, it's really subjective, so that's why I'm giving you a few scenarios. The next scenario is this, for example. But actually, I cannot. No, yeah, wait. Yes, let me check. Let me check here. Let me check there. This is basically, look how well the 61.8 worked on this one. Look at this. This is a very key barrier. I mean, this is a very key important barrier, this 2080 zone. If we clear that 78.6, if we do draw for the Fibonacci extension this way, then 78.6 is the next one. And basically that's near the 2360 territory. So also actually good potential target. But again, for that, we need to see a clearance of this zone right there. In general, it is possible, but question is when that will happen, because at the moment, yeah, I don't know. I mean, this is, maybe we'll stall here near this 2080 zone. Maybe we'll stall a little bit here. Maybe we'll drift back down because at the moment we're forming a higher low. We're struggling with the higher high, so we need to see some clearance here. So basically, this is a very important level, as you can see. Let me get rid of the Fibonacci and look, that 2360 level that I have had before. Yes, it's good, but okay. Okay, look, I mean, at the moment, if we do draw something more short term, then these levels are actually quite attractive too. So, for example, the 2135, where the next holdup could happen, and the 2250 zone as well. That's something that I will consider at a later stage. But first things first, I want to see if we can clear this territory right there, that 2075-80 zone. Yes, this is something that I will be keeping a close eye on. You know, I should have called this session also. Not only it's time for the PCE and Canada's GDP numbers, but also gold. Let me just put that. But also watch gold. Let me just change this. I think this will be a little bit more accurate with the naming. Let's see. There we go. I think that would be much better. Yeah, I would also watch gold. There we go. Yes. So I think that makes more sense. So coming back to the daily chart and moving away from gold, actually, because enough of that. Let's give it a little breathing space here, and let's have a look at silver. Silver, I mean, on fire, continues to be so, and yes, continues to rally and continues to move nicely to the upside. So far, so good. My targets got reached, the 25 territory together with this 25.27 zone. So now my question is, can we see a further move north? Well, it's very important to keep an eye on, where's my highlighter? It's very important to keep an eye on this little area right here. This is a very strong area of resistance. So if we can clear that, then yes, I will go higher. My next targets will be around here, guys. So here and here. So these are going to be my next targets. The area slightly above that 26 territory, and then we'll go from there. So, but again, I want to see what's going to happen here first. That's the highest point of July of this year. So if we can get a little hold up here, something like that, then yes, that would be great. But yeah, if we break the upside line, then yes, I will consider a move lower. Copper. So looking at copper, if it's going to load up, and while it's loading up, I'll have a sip of tea. So yeah, okay. There we go. So look at this beautiful move. I mean, I talked about this. I said, look, whenever we break a trend line, we tend to retest it from the other side. It doesn't happen all the time, but kind of most of the time. And there we go. A beautiful kind of example of that. We rebounded, so now I'm aiming to the upside. I'm gonna get more excited with the upside if we can get a pop above the 3.86 territory right here, and yes, then we'll go from there. So basically, I think that's the better option here, and I think that this is the kind of the option that I will consider for now, the safer option. If we can get that pop, great. I'll go further north. For the downside, I need to see a drop below the crossroads of these two trend lines, and then I'll go lower. Oil, oil, oil. There we go. Breaking the neckline. I am very, very happy. Let me just double check. I think the OPEC meeting is starting today or something like that. Just yeah, I think it started yesterday. Yes, yeah, sorry, it started earlier already. Sorry about that. Yes, it's starting today. It has been rescheduled. There we go. That's where the confusion is, because I heard that it should have been earlier, but then it kind of got something went wrong. I mean, then it was 25th, 26th of November, but then it has been rescheduled again. I mean, honestly, so basically, apparently today is the when the OPEC meeting starts. So we will be focusing on that one as well. And look, let's put that even aside. I want to just focus on the technical bit for now. What I talked about from the beginning of this week, I said that, hey, maybe this is a head and shoulders pattern with the neckline being tilted here, this downside line. And it's working out. So far, so good. I'm leaning towards the upside. My next target, as I mentioned, is going to be somewhere around that 79.77 zone or this downside line. I'm not going to do anything else apart from examining that scenario. If we start falling back below the neckline, hey, okay, great. You know, we could start looking at some lower levels, but to be honest, for me, the safer option will be the to wait for a drop below the 73.90 zone, and then we'll go from there. Natural gas very quickly. So we're seeing a bit of a retracement. That's fine, but we're still below the 2.86 territory. So maybe it's a bit of a retracement before another leg of selling. So as long as we remain below this hurdle, yes, I will continue targeting the downside. If you're not comfortable with this idea, then you can keep an eye on yesterday's low near the 2.76. A nice good break below that would confirm a forthcoming lower low. Bitcoin. Look at this. Look at this animal. I mean, the animal seems to be tamed by the 38,000 mark, and it's struggling to stay above it. It keeps on breaking it, but it's struggling to stay above it. So what it means that maybe, just maybe, we could end up seeing something of a range here for a while. So maybe we could see this one drifting back down, but still I need to see a break of this upside line here in order to consider a move lower towards the potential lower side of the range. If I can get that, great. More sellers. If I can get this break here, yes, I will go lower towards this. Yeah, more sellers who could join in on a break of this upside line. For the upside, I need to see a pop above this barrier, above that 38,000 mark, and not only a pop, I need to see the body of the daily candle staying above it. Now, some of you might say, "Hey, Darius, but maybe this is a nice, it's a nice kind of ascending triangle pattern. Maybe your line is, drawn a little bit incorrectly. Maybe it should be something around this." Well, maybe, true, but it's all subjective. So maybe it's this, maybe it's that. You can put both of them if you wish, but look, it's at the moment it's kind of, it's really subjective. So maybe it's an ascending triangle. Maybe it's going to support this. Either way, I would need to see a break below this, below both of these, in order to consider a move lower. For now, yes, there is potential still for the upside, but like I said, I'm just curious if this is not going to end up being as a range. Jeff Kwamba, is gold still going higher? Look, I just did a big piece on gold just a few minutes ago, so please have a look at the recording. I mean, honestly, I talked a lot in there, so I'm just not gonna go back to gold. And just like I said, once the video is finished, you can have a look at the recording and just kind of scroll quickly to that part, to the gold part, because it's here. So this is the big list that I need to still go through, so sorry for that. I'm kind of need to stick to the schedule, but yeah, look, I just, like I said, I did a big one, kind of, well, ish, not big one, big-ish piece on gold. So just kind of keep your eyes on that one, and have a look at the, like I said, the recording. So yes, there we go. So please have a look at the recording because I need to stick to my schedule. Ethereum. So looking at the picture here, I mean, I have the recording. The recording will be done after this because this is a live session right now, and it's going to be saved, and it's going to be saved in the on our page, on the Easy Markets page, so you can go in there and or it will be in the where you found the this video, so it's kind of in there in that section where live streams, basically in the section of live streams, so you can there it's in under analysis. And yeah, you can find it in there. So yeah, it's going to be recorded after this video. After this live session is done, it's going to show up as a recorded session, and you can find it in community and then live streams, and then you can go in there and you will see it. You'll see my piece running in there. Or not running, but sitting in there. So yeah, guys, so looking at the picture right now, looking at the Ethereum, look, we had a nice little rebound here, or we still kind of, yesterday we had a little rebound here, but we're, no problem, Jeff, no problem. But at the moment, I'm still keeping an eye on this highlighted zone. I talked about this whole week about it, and still, it's something that I am, yes, very strongly holding to. As long as it remains above that area, above that highlighted zone, then yes, I will consider a move to the upside. For the downside, yes, I need to see a clearance again, a drop below this territory. I mean, we did get some drops already, but these were false breakouts. So if we can get that nice drop again below this, then yes, I'll consider a move towards this upside support line drawn from the low, the 27th of October. The Polkadot, something that I haven't looked at for quite a while, to be honest, and let me just remove everything and start fresh. So first of all, what we see here is that after quite a while, and that took about a year or something, or maybe even more, 2 years, yes, 2 years, our EMAs, my EMAs are here pushing higher, and look at this. I mean, we are climbing. We climbed above the 100-day EMA, and it seems like we could climb above the 200-day EMA as well. So that's going to be quite an interesting moment here, I would say. So long story short, I am looking at this idea of potentially aiming higher, but I want to see if we can maybe drift back down, test the psychological 5 territory, $5 mark here, and then rebound and push back up, because ideally I also am looking at this downside line. So this is for that extra confirmation. So if we can break this, great, more buyers here could join in. Oh, what an arrow. Look at this. Just let me adjust this very quickly, guys. So yes, if we can break this downside line, then yes, I will go higher, and I will consider a move towards this 5.90 zone or even above that. So long story short, if we can see the 50-day EMA crossing above the 200-day EMA, this could potentially open the door to some higher levels. AUDUSD, guys, very quickly on that one. So there we go. We had a nice push. We did correct back down yesterday, but we remain above this upper, this highest highlighted zone, which is between these 0.661722 levels. So long story short, in order for me to go further north, yes, there is a good chance to see a push towards that 0.6715 level. That's my main target for now. Basically, as long as we remain above this highlighted zone right here. And then yes, I will consider a move lower. If we start dropping below that, I will consider a move towards the 200-day EMA right there. Jumping into AUDNZD. So this one of my favorite ones, and there we go. We are still aiming lower, and as long as we remain below the 1.0773, I will continue targeting the downside, aiming for that 1.0705 territory, somewhere around here, as long as we remain below the 1.0773. NZDCHF, beautiful, beautiful. Look at this. I mean, this theory is working. I mean, whenever we break the trend line, we tend to revisit it from the other side. So yes, after a beautiful move higher, after we tested my 200-day EMA, we drifted back down, tested the downside line, and now it's providing good support. So if we do kind of rebound from this downside line, then yes, we could we could see a move towards that 200-day EMA. If that gets cleared, a fourth, then not a forthcoming higher high, no, not yet, but a push above that 200-day EMA could attract even more buyers into the game, potentially aiming then for the highest point of September, and so on and so on. But at the moment, all eyes are on this downside line. Let's see if we can rebound stronger from here. And then, yes, and then we'll go from there. If we do drop below it, there could be a chance for some lower levels. Excuse me, but probably more sellers could join in on a drop below the EMAs right there. So USD JPY, USDJPY is an interesting one here as well. So far, so good. Look, I mean, this idea which I've posted last week is working out nicely because I talked about this potential scenario where we could test this upside line, we could maybe rebound from it. So now we are kind of rebounding-ish, but still, I would say at this point, if you want to be a little bit more on the careful side, wait for a pop-up of this downside line here, and then, yes, we could go from there. So long story short, if we do clear this downside line, then yes, I will get more comfortable with some higher levels, and I'll aim for that 149.69 level here first, and then we'll go from there. USDCAD, so after beautifully rebounding from this 200-day EMA, we're currently stuck because we're stuck between the 100 and the 200-day EMA. So in order for me to go lower, I need to see a drop below the 200-day EMA here, and also the current lowest point of November near the 1.3541 zone right there. And then, yes, I'll go from there. For the upside, in order to consider a larger correction to the upside, I need to see a push above the 1.3630 zone, somewhere around here, in order to consider a larger correction to the upside. So that's my game plan here for USDCAD, and in general, keeping an eye on the OPEC meeting, because again, oil has a huge factor here, the Canadian dollar, and of course, this movement right now is mainly because of the slightly stronger dollar, because oil is pushing back up, and normally we would see Canadian dollar strengthening here, but the US dollar seems to be a little bit more stronger, and that's why we're seeing this kind of reversal here on USDCAD. USDCHF, very quickly, boom, there we go. We cleared and we stayed below my territory, below my 0.874560 zone. So yes, we're continuing to trade below that. And to be honest, I mean, look, this is where the moment where this theory, which I've mentioned already, where we have a strong decline and then a gradual decline, this is where that moment it didn't really work well, because it seems like we should have seen maybe like a rebound, but there we go. That's a good example when it doesn't always work. So you always have to wait for that clearance of the upper side of the falling channel first, and then kind of do maybe, examine the upside. But at this point, look, it was seen more of a continuation pattern, and it could still be seen as such. I am targeting the 0.8690 zone marked by the low of the 10th of August. Or in other words, is this the lowest point of August? Let me double check. Yep, that's correct. That's the lowest point of August near the 0.8690 zone, and then we'll go from there, guys. Okay. Looking at the picture here, let just wanted to double check very quickly something. Okay. Right. Okay. Mm-hmm. Right. Let's see. US dollar against the Mexican peso, guys. US dollar against the Mexican peso is working according to the plan because basically what I talked about here was on Tuesday, if I'm not mistaken, or Monday. No, Tuesday it was, yes. I said, look, we could be forming this falling wedge pattern. And according to all the TA rules, such patterns tend to break to the upside. So if we do break the upper side here, then yes, great, more buyers here could join in. I'm not going to drag this one way too much up to the upside. I'm only going to aim for the 50 and the 100-day EMAs, and then I'm going to go from there. So long story short, for now, I am keeping a close eye on this upper side of the falling channel. If we can get that clearance, wonderful. I will consider a move towards these two EMAs, and then we'll go from there. For the downside, I would like to see a drop below the psychological 17 level in order to consider some lower levels. GBPCHF. So I've picked up on this one recently as well, and there we go. We're struggling with this this barrier, which is for me now is just the more important one to watch. The 1.1154. If we can clear that, we can also clear the 200-day EMA and aim for the 1.1215 or the 1.1244 zone right here. But at the moment, as you can see, we're breaking this upside line. Look, I think that this upside line is, given it's a very tentative one, I think that maybe we should mainly stick to the EMAs. If we can drop and stay below them, then this could increase the chances for a further move lower towards that 1.0990 territory, and then we'll go from there. GBPUSD. So yes, GBPUSD is looking quite nice here as well, because we are getting a hold up near this 1.2713 level. And this one right here, and I need that clearance. I need that push above that area in order to go higher. At the moment, it's a nice little correction lower, but I'm not really getting bearish because my bearish scenario will be from this upside line drawn from the low that's 17th of November. EURGBP. So look at this beautiful thing. So last time I talked about this, I said that, hey, keep your eyes on this upside line. If that gets broken, then this could open the door towards lower levels. Initially, I was aiming for that 0.8650 zone, but there we go. We've surpassed that. And now it's time to see if we can go towards my next target, which is the 0.8615. I know it's not far. It's only about 15 pips away, but still, look, this is what I was aiming for initially. I only had this level here. I mean, if that gets cleared, don't get me wrong, we could aim for the 0.8567, 69 zone. But at the moment, I'm just going to target this. I want to see if we can get like something like a rebound or something like that. But at the moment, yes, I am just targeting this level, and then I'll go from there. For the upside, I would need to see a push back above all of my EMAs on my daily chart, and then I will consider a move slightly higher. So let me just get rid of this. I want to mark the highest points instead. So yep, I would think that would be a little bit more. That would make a little bit more sense. EURCHF, beautiful decline, beautiful drop. I talked about this little range here in the beginning of this week. If you remember, I said that for me, for the upside, I need to see a pop of the 0.9681 zone. For the downside, I need to see a drop below the 0.9619. There we go. We got that breakout. We already are considering the next short-term directional move, and it's already to the downside. So if you've missed this, I wouldn't say that you need to chase this one. Don't chase it, guys, because let it settle down. Maybe it's going to travel all the way towards that 0.9525, maybe not, but you don't know this, so that's why be a little bit more on the careful side. So I would say for now, just let's keep it short and simple. Let's aim for this 0.9525 territory, and then we'll go from there, because it's quite an important area of support for me for now, because look at this, how in the past it acted as a strong area of support. I mean, back in between the kind of the end of July to the mid-September, this was seen initially as an inside swing inside swing high of the 28th of September of 2022. So, but I'm keeping that one on the chart because I want to see if this is not going to end up being something like of a head and shoulders pattern later on. So basically kind of talking about this idea here. So let me just grab this highlighted zone. I think that this would make a little bit more sense in this case. So maybe it's like an inverted head and shoulders channel or channel formation, inverted head and shoulders formation could be. But if this is the shoulder, the left shoulder, then we could expect something very complicated here as well on the right side, because it cannot be like this on one side and only like just one like clear shoulder on the right side. No, because that would be way too obvious and kind of, no, it has to be like, it has to be symmetrical. Otherwise, it's not a head and shoulders pattern, inverted head and shoulders pattern. Maybe it's something else then. But at the moment, I am leaning towards that 0.9525, and then I'll go from there. And finally, EURUSD. Yes, beautiful decline back down. So as I said yesterday, that as long as we remain above the 1.0965, I will continue targeting the upside. For now, I'm seeing a bit of a drag to the downside. So look, I will consider lower levels if we break the upside line and we fall below the 1.0923 territory. If we cannot do that, then, well, there is still hope for the bulls. We could see this as a temporary correction before another possible leg of buying. But for me at this point, I would need to see this one climbing back above the 1.0965, and then we'll go from there. Oh, by the way, just very quickly on the U.S. government bonds, the 10-year one. So yesterday, I mean, we saw this one declining, and I mean, look, in general, from the beginning of November, it's declining because again, the stock market is moving in the opposite direction, and I think that if we are aiming for this 200-day EMA right here, then we'll expect the stock market to continue to rally a little bit more. So look, if we apply technical analysis on the government bonds here, so U.S. government 10-year yield, if we do that, if we apply it, then we could expect actually the indices to continue pushing nicely to the upside. So guys, that's it for this session. I'll have to wrap it up here. Thank you very much for watching and listening. I really appreciate that. Thank you very much for your time, for your views, for your likes, for your comments, everything. So yes, if you want to catch me tomorrow morning, the first winter day of the first winter day of this year. So yes, if you want to catch me tomorrow morning, 7 o'clock GMT time, I'll be happy to see you there. But please promise me one thing today: stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. Finish that month nicely, because today is the end of the month. So I'll see you tomorrow, guys, and thank you very much. Bye-bye. If you want to continue to please the trading gods, subscribe to our channel for a blessing.